Dreaming of financial freedom? You're not alone. We all want that sweet spot where our pockets are filled, investments are thriving, and we've got enough stashed away to live the life we've envisioned for ourselves and our kids. It's about building up a safety net that lets us chase our dream careers or retire without constantly worrying about meeting financial milestones. Imagine a life where your money works for you, not against you. In this video, we're diving into the pursuit of financial freedom, why it matters, how to achieve it, and the secrets to making your money work in your favor. Ready to take control of your financial destiny? Hit subscribe and let's explore the path to financial freedom together. Stay tuned for valuable insights that could transform the way you think about and manage your money. Subscribe now and let the journey to financial freedom begin. How do you become financially free? In order to achieve financial independence, you need to pay off your consumer debt, accumulate a safety net of savings, and generate enough passive income from investing or running your own business to cover your living expenditures both now and in the future. We are unable to meet our most important financial goals because of our mounting debt, unexpected expenses, excessive consumer spending, and other issues. Everyone has to cope with these issues, but you may set yourself on the best route to financial wellness by adopting the next 12 habits. Key points. Number 1. Establish financial and lifestyle goals for yourself and your family, and make a plan to reach them. Number 2. Set aside money for all of your necessities. Follow through on this plan, pay off your credit cards in full to minimize your debt, and keep an eye on your score. Number 3. Hire a financial advisor, begin saving, stay up to date on tax regulations, establish automatic payments through your employer's retirement plan, and establish an emergency fund. Number 4. Be economical where you can, live within your means, and don't be scared to ask for or bargain for better deals. Number 5. Maintaining your personal items is less expensive than replacing them, so take care of them. More importantly, though, take care of yourself and stay well. When you are financially free, it means you don't need to work or devote any additional time or energy to earning money in order to cover your living needs and many of your life's ambitions. These could be one or both of the following resources. Independent income. You can be financially independent if you own your own business, receive government assistance, or have other sources of consistent income that don't need you to labor. Social Security benefits are paid each month if you are eligible. Regardless of the amount of time you invest, you can get paid if you have grown your firm to the point where you are able to step back from day-to-day operations. Rent is paid to property owners once a month, while property management frequently oversees upkeep and bears the risk of renting to a tenant who fails to make one or more payments. You are financially free if you make enough money on your own to cover your needs and wants. Abundant assets. Generally speaking, investments in stocks, cash in bank accounts, and valuable property are assets that promote financial freedom. You must first invest in such assets, typically substantial sums of money spread over an extended length of time, in order to employ them in the process of achieving financial freedom. For instance, the majority of financial advisors would advise you that maintaining a consistent 401k contribution schedule is essential to your long-term financial security and stability. Many people may find this to be the case if they begin investing early enough, in their 20s, 30s, or even 40s. But individuals who put off investing until they are 50 years of age or older will not have enough time to benefit from compound interest power. When accounting for inflation, their contributions will usually not even double. Building financial independence with assets could present issues. Consider it a delicate balancing act. In order to have enough money to pay your bills when using this strategy to cover your living expenditures and wants, you must sell an asset. If you are unable to sell an asset, real estate, for example, quickly enough to obtain the money prior to the due date of your bill, complications may ensue. One could refer to those in these situations as cash-poor millionaires. Although the worth of their assets exceeds $1 million, they are unable to access it quickly enough to put it to use. When you run out of assets to liquidate before you pass away, it could be a much greater issue. In essence, you won't have any money left over to pay your payments if you deplete all of your assets too quickly. The majority of financially independent households combine the two strategies. They may have their own source of income, such as Social Security, a business, or investments in dividend-paying stocks, but they also likely have enough assets in the stock and real estate markets to give them financial security, knowing they have plenty to fall back on in case things get tight. Life goals. Make a note of the total amount of money, income, and assets required to support your desired lifestyle. Indicate the year you want to accomplish your goals as well as whether or not you will need to make payments for them. Your chances of achieving your goals increase with their specificity. Next, work your way back to your current age and set frequent financial milestones. These could be specific monetary savings or newly acquired assets. Pay your dues and debts. Compared to credit cards and retail store cards, student loans, mortgages, and other similar loans typically have interest rates significantly lower, posing less of a risk to your financial situation. You might accumulate hundreds of dollars worth of high-interest debt with credit cards. Being deeply in debt for a long time is the exact reverse of being independent. After all, having debt implies duty and even bondage, which run directly against the notion of financial independence. Monitor your credit. Any interest rate pertaining to credit cards, store cards, auto, truck, or home loans or refinances is influenced by an individual's credit report. It also affects other items like life insurance and auto insurance premiums. The logical conclusion is that an individual who practices risky financial behavior may also drive recklessly and consume excessively. In actuality, those with lower credit scores tend to be more likely to be involved in accidents and file larger claims with their insurance companies than do people with higher credit scores. This is not to say that someone with terrible credit is a bad driver any more than it is to say that a 23-year-old man who is single is not a bad driver. One of the various risk pools that insurance companies consider when calculating your monthly premium is poor credit. Learn what must be learned. Keep up with market developments and financial news, and don't be afraid to modify your financial investment portfolio as necessary. The strongest line of protection against people who prey on naive customers in order to make quick money is knowledge. To avoid going overboard when using your credit card, be sure you are aware of your credit limit. It is your duty to remain informed about such information. How will you know if you've achieved financial freedom? When you can live comfortably without relying on a regular work or career and have sufficient assets or income streams to meet your basic needs and your desired level of discretionary expenditure, you will have reached financial independence. This implies that you are free to work or not work, travel, follow your interests and passions, and live your life as you see fit. You should make a detailed budget that accounts for all of your costs, such as housing, food, utilities, transportation, insurance, and discretionary spending, in order to assess if you've reached financial freedom. After that, you should contrast your total income, which includes money from investments, rentals, and any part-time jobs, with your out-of-pocket spending. In the event that your earnings surpass your outgoings, you can be headed toward financial independence. It's crucial to remember that reaching financial freedom is a journey, not a destination, and that reaching your objectives could take some time and work. However, you may attain financial freedom and lead the life you've always desired with careful planning, disciplined saving and investment, and a willingness to accept short-term sacrifices. And that concludes our deep dive into the world of financial freedom. If you've been yearning for a life where your money works for you, not the other way around, you're in the right place. But remember, financial freedom isn't just a dream. It's a tangible goal that you can achieve with the right mindset and actions. If you found these insights valuable and are committed to turning your financial dreams into reality, smash that subscribe button, hit the like, and share this video with anyone you know is on the same journey. Let's build a community of empowered individuals ready to take control of their financial destinies.